What's going on, guys? We're going to take a quick little overview and kind of take a look at the technicals on the NASDAQ 100. So NASDAQ 100 is going to represent all of your mega cap, big tech stocks, all the stocks that we love to trade: Nvidia, Tesla, Apple, Microsoft, AMD, so forth and so forth. With that being said, another flat day in the overall markets. Nothing to really be too concerned about. And the reason why I say this, we're still over the 5-day moving average. We're still over the 10-day moving average, as well as a 20-day moving average. Now, where it starts to get a little hairy is for the intraday day traders, especially people who are trading on the option side of things, because, you know, as this market chops around and as the ranges start to get a lot more contracted, meaning they, instead of Tesla having a 50-point range in a day, it goes down to like a 20, 30 point range, right? Instead of something like Amazon having a 4 or 5 point range, it has like a 2-day range. When ranges start to contract and we start to consolidate, if you're wrong on your entry, it can really start to hurt. Depending on your position sizing, if you're playing 5, 10 contracts of, let's say, Apple, and it pulls in $1 on you versus, pulling in 50 cents, bouncing, going up another dollar, $1.50, $2 in your favor. When it starts to do that, you have to really be precise on your entries. But, from a macro overview, nothing has technically damaged with the chart. We're still well above the 50-day moving average, and we're actually going on about 2.5 weeks now trading over the 50-day moving average. So one thing that I do kind of want to point out, we had some earnings, a little bit of a mixed bag. AMD down in the after hours, however, PayPal up, right? So with that kind of being taken into context, one thing that I'm looking at here on the daily time frame, if we can kind of just go back to yesterday and today, look at these long wicks that we have here. This is, not what bulls want to see from a short-term perspective, okay? Could we be getting ready to just roll over? It's entirely possible. Could we bounce up to the top of the range somewhere between 317 and 318? That's also possible. Like I've been stating in my videos, anytime the market needs a rest and we go through a little bit of a distribution phase, normally distribution lasts anywhere between 3 and 5 days. So I wouldn't really expect to break down too much this week unless something happens. Obviously, today we did have a nice little rug pull intraday. Briefly after Nancy Pelosi landed in Taiwan, there were some articles that were surfacing. I really don't know the whole gist of it because, I'm not really a news trader. I'm not a headline trader. I'm not a fundamental trader. All of my strategies are based on technical analysis. So it really doesn't matter whether the stock's going up or down. When we break certain key levels of supply and demand is where I'm going to, make my best possible opportunity for a trade. However, for the short term, tomorrow being Wednesday, right? Today's Tuesday. Tomorrow being Wednesday the 3rd, what I'm looking for the rest of the week here is if the NASDAQ 100 starts to lose 311.13, we've got some room down. And we've got some room down to 306. So what that means is whether you're going to trade the triple Qs below 311.83 or you're going to go to your favorite stock depending on whatever that is, as soon as the Qs start to give up that 5-day moving average, you can look to some of the favorite stocks that you like to trade and try to trade them below the past 2-3 days lows. As soon as they start to break those lows, you're going to take those stocks. For example, I'll just pick a random stock that's on my watch list. If something that obviously didn't have earnings recently, but let's just take a look at Apple, right? Everybody knows about Apple. So for example, let's say the triple Q start to lose that 5-day moving average. I would start looking at Apple to lose this supply zone here. You can see as soon as we gapped over this 200-day moving average, we made one push higher, and then we've been treading downwards. Now, again, this is not necessarily a bad thing. We can breach this area, sort of fill this gap to 157 intraday, and then bounce. If we do that, that's extremely bullish. We're going to get a nice little consolidation and then start coming out here. And then obviously your top side break is over 163.61. But if you are an intraday day trader, especially on the option side, and you guys are looking for a nice little scalp, if Apple starts to lose that 159 area, it would be a spot where I would look to try to make a little bit of cash flow. So 159 down to about 157.83. I'm going to want to clear my position on that way down and at least get down to around 50%. If we can get 50% of our position sizing there, I think that would be a really good move. And then, have a little bit of an expectation to try to at least backtest 156.90, 157 this week. Again, that's the rising 10-day moving average. That's also going to be a firm support here from the linear regression. So you don't want to get too carried away. It doesn't mean that if we break this, we're coming all the way back down. What it means is it might present a little opportunity for a trade to the downside as stocks start to rest. So just kind of getting back here to the triple Qs. Obviously, we know our topside break is here, but right into supply at 320. So over the recent highs here, we only got about $1 to $2 worth of space here. And if we look to the downside below 311.83, we've got room to the 10-day moving average, which is going to be our rising support here. And that price is going to be around 306, 307. Anything below 306, 307 has the 20-day moving average sitting at around $300, $302. So even if, right, we always have to play devil's advocate, even if we came all the way back down to the 20-day moving average, does not mean that anything structurally is broken. That would be a perfect pullback. Give stocks enough time to get pulled up. Some of the ones that have been lagging, give the stocks that have been high flying enough time to kind of digest and consolidate before we start to make that next push up. I really wouldn't get too worried about stocks free falling or going down to test these recent lows in this bear market unless we start closing on a daily candle below 294.35. Okay, that's the 50-day moving average. If the bulls do decide, to lose the battle here and we give up this 50-day moving average, we've got a lot of airspace down. Again, this is not going to come in 1 or 2 days. It could take multiple days. Maybe it's next week. Maybe it's in 2 weeks. Maybe it's not at all, right? I just want to be prepared in case something does happen. So 294.45, anything below that, especially if we close the daily candle below that, everything will be a short going into the next day because obviously bears have regained control. I hope this video kind of helps. Again, guys, if you're looking to kind of learn how to trade options on a day in and day out basis, work with me one-on-one. I've got a few coaching spots open. I'll give you access to the private Discord, my watch list, and all of my video courses. Head over to evolutiontraders.com, become a gold lifetime member, and I will get you guys all set up. But for everyone else, I'll see you guys all on the next video.